on today's Money Monday. There's a new survey out that shows 1 in 4 sports bettors have missed paying a bill because of their losses. And with the big game coming up, local financial professional Abby Reed, co-CEO of Reed Financial Group, is here to discuss the world of gambling a bit and how it compares to investing. Does it compare at all?
Sort of.
Okay,
and
talk to me about that.
the lines are getting a little blurred, which is definitely a problem.
Yeah.
So sports betting has gotten really popular. The way was paved for it to become legal in states that choose to in 2018.
Yeah.
So now we're starting to see the research come out and how that's affecting the average household and how that's affecting the finances of the average household. So it's legal in 30 states and some territories. Georgia's not one of them yet.
I know that for a fact.
Yes, exactly. So don't do it, it's illegal.
Yeah, right.
But there's a lot of legislation that's pushing for that. So I think this is something that's going to affect our community at some point in the near future. And so we're trying to get ahead of that and educating people on the difference and how to do it responsibly and in a way that's entertaining rather than something that you're really betting on or betting your future on.
Talk to me about the difference. I'm going to play the devil's advocate here for the sake of our audience here. You are in both instances investing money, putting some money up and not guaranteed a return, kind of at the whim or the whimsy of something that's out of your control. What are the differences you would say to somebody who says that?
That's a great point, and that's true. So with gambling or playing the lottery or investing, you're hoping that your smaller amount today is going to be some greater amount in the future. The key difference is really 3 main things. And so we'll talk about those, but mainly what you're going to want to look at is what's the track record of this? Is it diversified? What's the time horizon? And what are your odds of this going to 0 overnight? If your odds are pretty high that the house is going to win and the time period of the investment is fairly short, the odds are always stacked against you. With investing, that is a much more long-term plan. It should be well diversified. It should have a long track record, which is what we coach and what we build our portfolios to do. So those are the main differences. When something that's a gamble, it doesn't even have to be sports. If you're picking a stock of a company that you personally like, and putting too much of your net worth in it or too much of your investment, that's a gamble too. Because it's not diversified. If you're trying to say, oh, this company is going to go through the roof over the next week because of X, Y, and Z, that's a gamble.
I remember a couple of years ago, a lot of people were comparing, crypto, these different sorts of, financial investments to gambling, and they were saying, hey, this is not a great idea, but some people won, but you're saying that's not a good bet to go and do that long term.
Right, so that can be a part of your discretionary spending, and if you have something you want to take a flyer on it, like crypto or like a company that you really believe in, you can certainly do that as long as you can afford it. So what we teach at Reed Financial Group is 50, 30, 20. 50% of your income goes to your needs. So those are the essentials. 30% goes to the wants, so that's what makes life enjoyable. 20% is the savings and investment. The savings and investment, that needs to go to things that are fundamentally sound, well-diversified portfolios. Now, if you want to invest in things that are riskier, go into that with a part of your 30%. So that's gonna be your extra investments. That's gonna be maybe some entertainment if you're legally betting on like fantasy sports, which you can do in Georgia. So those are the main differences. With your core portfolio, you want to make sure your time horizon is appropriate, so more long term. You want to make sure that you're well diversified. You're not just putting all your eggs in one basket. And your emotions are in check.
Well, let's talk about that. We have about a minute left, but let's talk about emotional investing or betting.
Yes, so if you are betting in something or investing in something and your emotions are either really high or really low, that's a sign that you're probably not investing in something that's fundamentally sound. So investing, real sound fundamental investing, is boring. On a day-to-day, you're not gonna have high highs, you're not gonna have low lows, but time and time again, it's shown that for the average investor, now there are exceptions, of course, for the average investor, boring is going to win the race every single time.
Most people want that return right away, but you have to be able to stay in there for the long haul.
Yes,
all right.
exactly.
I love that. Listen, I won't be putting $50 on the Seahawks after we talked about that. So thank you for that information, and thank you for being here. Absolutely. We'll have all of this info for you on atlLiveshow.com.